Welcome back to another episode of Palisade Radio. I'm your host, Karema Mutlu, and on today's show, we have Jim Pettit, who is the CEO and President of Aben Resources. Welcome on the show, Jim.
Thank you very much, Graham.
Let's start by going over the early part of your career. Give us an understanding of how you first started in the junior mining industry and how did you become interested in this space in the first place? And have you focused on exploration throughout all your career?
Well, sure. We're going to go back a little ways. It was my father-in-law got me involved. Him and his partner were very early kingpins in the industry here in BC. When they started moving west, what's his name? Archie Bell sent Bern Brennelson out here and started looking for potential discoveries and mines, built some mines in BC. And Bern's partner, financier partner, was my father-in-law. And, over the years, he saw me. I was buying and selling companies. I've never been employed by anybody, really. I've been self-employed all my life. And he got me going on this a long time ago. I understood the capital markets right away. I took a great interest in the geology side of it as well because I've got part of my university experience was majoring in geology, but I never completed that. So it was kind of a natural fit, and we actually started up a couple exploration companies way back when. And it kind of built from there, and that was when, I'm looking at the discovery potential. That's what excited me the most because that's where you have the biggest upside. And then when you go into development, things settle down and get what I call boring until you ramp up into production. So it's really that discovery phase that gets your juices flowing, and that's how I got into this, from way back, like probably the late 80s, early 90s is when I really got involved.
Throughout your career, Jim, you have worked with a number of legends within the junior exploration space, Ronald Netoliski being one of them. So can you give us a sense of what you have learned within the mining industry and what lessons they have shared with you?
Well, the biggest thing I've learned is that I don't know everything. These guys know a lot more than I do, so you got to listen. At every chance you get, you have to listen. And a lot of these guys are in the twilight of their careers, and when they talk, and it isn't often, they have advice. They have good advice, and for example, Ron up in the Golden Triangle, wow, he sits in on a meeting every now and again with us, and our geos are just like listening because he knows, he remembers areas up there that you got to go back there, you got to go check. I know that area. There was some really good samples that came out of there back in 35 years ago. That's the kind of thing you listen to. And there's a lot of people like Ron, but I shouldn't say there's a lot of people like Ron. There's not a lot of people like Ron. They're getting fewer and fewer. And, I'm in my 60s, he's in his 70s, and I'm thinking, he's a legend, and you got to listen. But there's a lot of, there are other guys like that, and you got to listen to them, and I've gotten to know quite a few.
As an investor and company builder in the resource space, I would like to talk about not only some of your successes, but also perhaps some of your mistakes. Mining exploration is a risky business and the odds of success are not in your favor. So how do you navigate your way through the ups and downs of exploration success? There are many stories of drill holes that come up dry, while towards the end there might be a hole that comes out of nowhere when you're simply running out of cash, and then that will change the company completely. So can you talk a bit about this and this experience?
Oh, yeah. That's the old, about all, drilling, and everything's coming up dry. There are the stories like the Hemlo story and the Eskay Creek story, and all it is perseverance and the ability to raise money. The first thing I look at, though, when I get involved in an area is risk assessment. Is it a good area to be in? Is the geopolitical risk acceptable? Things like that. And then you look at the geologic favorability. What's the history of the area? And how much information is available to you in terms of geology that, and why now? Let's just talk about the Golden Triangle. It's It's an area that had a lot of work a long time ago. It happened to be in an era that it was just the beginning of flow through. And so there was just this amazing abundance of money available, and they were doing things you couldn't do today. Today we can do it now because we have an infrastructure that's been built. It's brought the drilling costs way down. Back in those days, it was like money's no expense. There's so much flow through coming into the system, and that's something to really look at is in today's world is costs and that sort of thing. And going forward, there's lots more there. There's plenty of there's plenty of places to look, but you got to look in areas that have the attention and attention of the investing public.
As a company builder, Jim, can you talk to us about the shape of the junior mining industry today? We're in a period where less and less economical deposits are being found, and the ones that are found need to be drilled far deeper than before. So are the gold majors and producers in the industry making efforts to focus on exploration programs? What is your sense?
Well, I think, just recently we're hearing they are. The majors are starting to pay attention and get more involved into exploration. Newmont now with the takeover of Goldcorp is fairly good at this, getting involved with juniors. Newmont is also a go-to company for juniors. And then I heard at the Roundup this year, one of the keynote first talks, Rio, they were talking about getting back. They need to build up their presence in North America, specifically BC. That's really good news. That means they're more than likely looking at some good, strong juniors with good exploration expertise. So, that's something you keep on tap all the time. I've got our geos are talking to these guys, the people in charge of exploration for the big companies. They're talking to them all the time.
For investors who are listening to this, what advice would you give them about speculating or investing in the junior gold space? You are currently working in the Golden Triangle yourself, an area famous for high-grade results. So how important is the area and infrastructure when making a bet on a junior mining company?
Infrastructure is huge right now. The cost of money is very high. So if you can drive your biggest cost is drilling. So you need to make sure that you've done all your homework before you contract the driller and start drilling. You need to do whatever it takes to reduce your risk. It's absolutely vital to have the infrastructure. And if you don't, then you're going to be banking on hopefully a major, a big brother to help fund you, because you're going to be totally, dependent on helicopter support, et cetera, et cetera. What we've got going here is, you've got a junior space that, there's a lot of us. The market has evolved. All you have to do is go to the PDAC, and you can see the amount of juniors that have survived through the downturn. And they're all doing it for their own reasons. They all have, but the main one is to be in a good jurisdiction, to have the infrastructure, to lower your costs, so that you can continue to do what you're doing. And, the difference, I think I alluded to it just a little while ago in the Golden Triangle, is there's infrastructure there. So we've got our costs down, under $300 a meter, where back in those days it might have been closer to $1,000.
Okay, as we begin to wrap up the show, Jim, is there anything else you wish to share with our listeners today?
Well, just a couple things, I guess, about Aben in particular. Reasons to invest. There's a couple. I mean, we're in an area that's known for high-grade gold discovery. The potential's there. There's a lot of other companies there, and like I just said, the infrastructure is now there. There's a highway that runs right up to it. There's road access right into the middle of the heart of it. There's access to lots of contractors in the area now that they didn't have before. But Dease Lake has lots of contractors, and to the south, Stewart and mainly Terrace and Smithers has lots of contractors. So that accessibility is a wonderful thing. It's also there's an area play going on. So even if we haven't started drilling and somebody else has drilled something that's good, our stock moves. Everything moves in, tandem. It's a wonderful thing to watch an area play really work. Good for trading anyway. And then on the big picture scale, you've got gold. If you want to be in gold, you want to look towards the potential for high-grade discoveries. And then follow the process from there. But you got to believe in the gold cycle though right now, and I do, and a lot of other people do as well. And I think we're in a good space.
Excellent. Okay, well, thank you very much for your time today, Jim. Much appreciated.
Thank you very much, Graham.
Think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip-your-face-off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?